As we approach the midway point to 2023, let's take a look at prices that Bitcoin will never see again, using data, the facts from the charts for BTC over 12 years of history, and of course, the mega one, the S&P 500, over 100 years of data as well. We want to stick to the facts here, not the opinions, not the subjective views, just the facts from the charts. Make sure you hit that like and subscribe. And if you want to join our members, just checking out the community, our TIA community in Discord, scroll down in the video description. There is a link there to get your invite. Join nearly 5,000 members in TIA Crypto. And you can also start to see some of the results there, the goods, the bads, and the beginners. 1 week into TIA Premium, and they are making some good little gains over there. A profit is a profit. So that link again, scroll down, free TIA Crypto Discord. You can check out some of the free content in these particular channels up here. All right, guys, this is your home of macro cycle analysis, studying the past to forecast the future. We obviously do our absolute best to cover crypto, Bitcoin, real estate cycle, and of course, the stock markets as well. Today's video, I want to have a look at the monthly returns for BTC and of course, cover those prices that Bitcoin will never see again. Just wanted to stick to the facts on the charts. I know it's a huge title to live up to. Personally, I don't like words like never and impossible and things that are absolutes in trading or investing because anything can happen. I'm just going to use the data from the charts and just look at some prices which Bitcoin has never reached and probably will never reach again, but also look at what we can do if some of these prices are reached. I said I'm going to look at prices that are never, and of course there's going to be some that may be reached. All right, so we're coming up to the midpoint of 2023. That's halfway. Remember, we still have calls from many pro traders and investors in the markets and analysts and news media and whatnot that they're still bearish in the market. Absolutely okay, nothing against that. I just want to stick to the data in the charts. Now, those particular calls are probably getting a little bit worn out at the moment. They'll come back in full force when we get some sort of correction. And if that's the case, I want to show you how to take advantage of those situations. Now, there's been a couple of videos that I've put out here. One in particular is going back to April 13th, and I also have another one here on March 7th, which was before the banking collapse, looking at profits, looking at what could happen to the S&P and to Bitcoin in 2023 with much, much bigger upside. And this was while there was far more bearishness going on. As you can see here, we had a bear market rally call from the Global Fund Manager Survey. There was about 77% of fund managers were saying that this was a bear market rally. How wrong they were at the time. So the same sort of thing goes for BTC. So I just want to start with the 6 monthly as we close out another 6-month period. And remember, those calls for recession have now been pushed to the second half of 2023. If you don't get it in the second half of 2022, push the calls out to first half of 2023. If you don't get it in the first half, push it out to the second half. And you can see that this will continue on and on and on and become less and less and less. Like the noise will be less about the recession or at least downside collapse, because we've seen in Germany a recession and new all-time high prices. So just because there's a recession doesn't mean we have to get lower prices. All right, so this is the 6-month chart of BTC. Let's just look at the lows and the highs of the bar. This is an interesting one because we have a couple of options here. So remember, these are 6-month bars. It takes a lot of data just in one of these bars. I know some people prefer candles. I'm going to stick to bars because that's how I learned to trade. We have this bar right here. It's a higher low. We have a higher high as well, and we've started to put in a green. Note the bear markets. We have 2 red bars. Next bear market, well, the previous bear market in 2018, 2 red bars. We also had 3 red bars in this case for the 2014 bear market, but that final bar was a high-ish close. We zoom in, that was a pretty decent high close there. The low was $163 with a top of 320, and the close was in the top half of that bar. So the pressure was running out towards the end of that move. Nonetheless, 3 red bars. Now, the only other period was a 1 red bar in 2011, and then this other red bar here, which was a lower high and higher low. So there haven't been too many 6-month periods which have been in the red. And once the reds end, it's very unlikely that we end up with another red. We've seen it happen once. We had a black swan. Like, you know, I'm not trying to factor in black swans into my own investing because the probabilities of them are so slim that I don't want to expect that I'm going to get a black swan every 6-month period or every year. It just doesn't happen. So looking at this, even with the black swan, the next 6-month period had a higher close. It was green because the close was higher than the previous 6 months. So that's the first rule, or the first thing that you can do if we see a 6-month period that goes below the low of the previous 6-month period while we're in a bull market. And to determine the bull market, we've done that many times on the channel before, and you can see that it's unlikely that you'll get more than 2 red 6 months in a row. There was this option here in 2014, and then the market took off from that point. So even with that third one, buying on those dips underneath the $300 mark was absolutely fantastic buying. Pretty difficult at the time because you can still see the market drop 50%, but that following 6 months, you're up and away. So what I'm trying to say here is we only have 2 data points, but that's why I've got the S&P, because we have 100 years there. If we see the next 6 months push up a little higher and then close a bit lower, anytime that we get prices below the previous 6-month bar, or if you prefer, candles, that is go all in. Not financial advice, just look at the data from the charts, but you can see that any of those periods that the market went underneath that previous 6 months, if we're actually given that opportunity, it's a pretty decent buy opportunity. And I want to show that in the S&P as well. Now you can see the previous bull market, that was 2016 and 2017, there was no 6-month bar that went underneath the previous 6-month bar until you hit the bear market. So there was no opportunity for that in that period of the market. So could we be in for one of those? It is possible. We see a 6-month that doesn't go below, we see another 6-month, and they just grind out until we get to those peaks for the final 6-month bars of the bull market. That's option 1. Option 2, have a couple of ups and downs, one little opportunity to get in underneath that level, and then the market takes off from that point. Now let's drop it down to the 3-monthly bar here. So the 3-month might give another couple of opportunities. In the first case, there is 0 opportunities. This yellow overlay is the TIA Gann swing indicator. So you can start to see where those higher highs and higher lows are, or in this case, a lower low. This was in the accumulation zone, then the market took off from that point. So you've got a quarterly candle, and we're about to close out another quarterly candle here above the previous quarterly candle. We've got 5 days to go. So the close at this one here was 28,500. If the market can, or if Bitcoin can drop below 28,500, then we'll have a lower close and this candle will go red. Nonetheless, like you can see from the previous bear markets in 2014, in 2018, and 2022, you had multiple red quarters in a row or within that same period. In this case, 3, you had 2, then a green, then another red, and in the most recent one, we had 4 quarters down. That was all the bear market. But then from that point, once we got the turnaround, there was basically no other opportunities to buy underneath those lows. And so that's what brings me back to the title of the video. Bitcoin will never see these prices again. Rather than me label the exact price, you can see for yourself from the data on the chart that once we get above the previous candle, so once the quarter breaks the top of the previous candle, whatever the low is for that candle, it's probably unlikely that Bitcoin is going to see that price again within that bull market. The only time you've got is 2019, and again, the Black Swan event. I don't want to keep having to go over that because although that happened, and some of you have commented yourself, it was extremely difficult for most people to buy because of how extreme the fear was just for that few days, couple of weeks, that 1-month period, depending on which market we're in, for investors to get in because of that extreme fear. And then from that point, the market's taken off from there. And so we're seeing that at the moment. We've got 2 green quarters up. We had 2 green quarters up before, 2 red. We had 1 that was just underneath it. So that was still a pretty good buying opportunity underneath the July quarter. So underneath that was 7,700. So any buying opportunities under that 7,700, you can see from hindsight with pretty good buying, was great buying actually for that next cycle. Same sort of deal going back here. If you're able to get in during this accumulation period underneath that level, I mean, that was the absolute bomb of the entire move. You had that little test and then the pump from there, and there was no other opportunities. So it's really about preparing for maybe there's not going to be any more opportunities, which, like I said, leads to the title of this video. Those prices for Bitcoin may never be seen again. And so we have the low of the previous 6 months, and that was 16,500. I think many can say now that we won't see 16,500. I do understand that a lot are still waiting for a 15, 14, 12, 10. Some crazy people are still waiting for 3. Out of their minds, not focused on anything that's actually happening with the data in the charts. That sort of analysis thrown out the window. That's noise. Get rid of it. You're going to be much better off without it. So going up from this point here, you can see if this is the quarterly now, if this is it, if this is the price range that will stay in, 31,400 and the low being 24,700, then it's possible that we'll never see under 24,700 again, just based on what we've seen in the past, except for this one opportunity here. So with that in mind, if we did get it, buying opportunity, get in and wait your turn. Wait your turn for those next higher prices in BTC. Now this gets a little bit closer to the action. This is the monthly chart. So looking at where we are right now, we are possibly going to close at the highest monthly price for BTC in 2023. But we also have our Gann swing indicator on here, so the yellow indicator. Link to this is in the video description. You can find it right underneath the free TIA Discord community link. So from this point, any moves underneath those swings, provided we've got bull market structure, are reasonably good buying opportunities. The reason is they don't happen very often. The only time, again, was the COVID pandemic, was the C19 drop. You got a break under the monthly. It was a higher low from the cycle low than the cycle took off from that point yet again. And so in this case, it's not completely out of the question, but it's unlikely that we'll see a break underneath the monthly swing bottoms. We've covered the 6 monthly candle close. We've covered the quarterly monthly candle close. We've covered the monthly candle close. Doesn't necessarily tell us what is going to happen in July. I'm going to do another video on that, so make sure you are subscribed, like the content up. You know the deal down below. But what this does give us is a buying plan, something better, absolutely better than trying to predict whether the next month is going to be green or red. I know most of you are getting the picture. You understand that this isn't about trying to predict what the next price is so that you can go out and take your rent money out, dump it into the market, and then hope that Bitcoin goes from 30K to 60K. This is about planning for the what ifs. What if we do drop below? What do the probabilities tell us that's happened in history that give us the confidence to make those trades? That's exactly what we're looking at here. I don't want to try and predict prices because that's a nonsense game. It doesn't matter what the price is, it matters what happens within that period, getting to those particular prices. So we've covered all 3 of those, and I've talked about the title of the video as well, some of these prices that will never be hit. You've probably heard me say multiple times before that 15.5K won't be broken, and previously, very close to that timing of that low, I was saying it's probably unlikely 19.5 will get hit either. Bitcoin's probably not going to break that. Now you can see the reasons why I think that's the case. Just based on history, these monthly swings barely break in a bull market. And I said it here in the video on April 13th, the interview here with Gareth. So I think that anyone waiting for a break of 15K, you can basically cross that off your list. And, you know, sometimes I go as far as to say, I don't think 19.5 is going to be broken just because of how severe the news was on that low and then how big the reaction was from it. That is going back to those points of the market and the reasons why. Looking at where we currently sit now, I don't think this current low is going to get broken either. I don't think 27,786, depending on which exchange you're on, is going to get broken either for those reasons. Of course, we're a lot closer to that point now, so you got to weigh up that there is the possibility, but looking back, it's much easier to see now. 15.5 is not going to get broken. 19.5 is most likely not going to get broken. Sure, if it happens, it happens. I always get those comments down below. You're wrong. Just wait for this thing to collapse for whatever bearish narrative reason. We've heard them all before. I'm putting them all aside. This is what I do day in, day out for over 15 years. there's an armchair analyst that wants to have a go at those prices. What do I care? I'm playing the game how I see it. Okay, so that's where we're at with those prices for BTC. How does this look for the S&P? I've only looked at about 12 years of data for Bitcoin. Quick look at the S&P to cover the grounds here as well. We're on a 6-monthly chart. Going all the way back to the 20s, we can even go back into the early 1900s, but let's stick with around that 100 years of data. The main thing I want to look at here is the 6-monthly swing. And if the market breaks under that 6-monthly swing, what should you do? Well, obviously we still have some bears in the room that are saying the S&P has to collapse because of a looming recession, because of higher interest rates, because of, you name it. Throw it in there. Whatever the next narrative is, throw it in there. But what we've seen in the past is if it does break down while we're in the state of a bull market, which is where we currently sit, then any opportunities under those 6-monthly swings is a great buying opportunity. Check out the first half of 2020. We had the pandemic. It took a pandemic to break a 6-monthly swing bottom. It was only there for a matter of days before it took off again. Excellent buying opportunities. You did not see another one of these buying opportunities. We had to go all the way back to the GFC collapse where you had the 6-month swing. The market was under that for 1, 2 periods and then bounced out of it. So basically 12 months you had to accumulate, and then for the next 12 years, you had no other opportunities. 11 years, 12 years, no other opportunities. Granted, it is a pretty big range going from 1,060 points to the low here at 660. It's a big range, but you've got that time. And when you look at it in context of the macro cycle, it's really not that much time. 12 months over the span of 11 years is roughly 10%, less than 10% of time to accumulate underneath these levels. It's going to take big kahunas to do so. Let's go back. That's only approximately 20 odd years. So looking back again, going to the next 6-monthly swing break, which we don't have on the entire chart here, even the 1987 collapse. This thing was massive. It was all over the news, all around the world. It did not break a 6-monthly swing bottom, and the market took off from that point. Even in the early 1980s, where we had the collapse again, there was another collapse in the market. It did not break a 6-monthly swing bottom. We have to go back to the 70s for any sort of period of a break underneath the 6-monthly swing. So you can see the 6-monthly swing came down into 1965. There was another monthly swing bottom here in 1968. You can see it broke in 1966. Buying opportunity. You can see it broke. You had 2 6-month periods of buying opportunities. Then you had the big one in 1974, multiple before the market took off and never to be seen again. That's it. Market takes off from that point and it's gone. Of course, there's money printing. There's money going into the system all the time. That's what's pushing these prices up. That's often a rebuttal from some of the investors out there. But at the end of the day, what are you going to do? Complain, type about it in a comment section, or get your money into the market so it stops getting chewed away from inflation, the silent tax. That's pretty much the rebuttal to that excuse. Well, there's money printing. So what? Well, get into the market. If you can see these signals come up, get into the damn market. Let's go back again. I said 100 years. You can see this next 6-month period. It went under there for a matter of a brief moment. In terms of a percentage, absolutely bugger all. Low to low, 1.63%. That was a break. And the previous one here in 1957 to the second half of 1957, you had 8%. And then the only other times it happened were through and after the Second World War. We're not there yet. Hopefully we never get to another world war, but they were the only other times that the 6-monthly swing was broken, and it was barely even broken. It touched it and then took off. Touched it and took off. So if you want to bet against those odds, by all means, if you think another one of these 1960s, 1970s eras is happening right now, it's a possibility, but even so, you can see that any time underneath that 6-monthly swing bottom has been one of the most incredible buying opportunities in history over 100 years. That is for the S&P. So do what I do, don't do what I do. Keep the data, keep the facts on your side, weigh the probabilities in your favor so that you can make those calls when the time comes. And when the time comes, it is the most difficult to make those decisions. Check out the times when it has broken the 6-monthly swing. There's a 6-monthly swing right there. That was your second half of 2008, which was the global financial collapse, the time that everyone remembers. Most people weren't buying at that time. Very few were, and they were buying up big, which is what put stopping volume in and the market took off. Same thing happened 3 years ago, the COVID pandemic. Most people were selling. Very few were buying. They were buying up big. Look at how high that close was. So I'm not saying that we can never break that swing bottom, but when it happens, I'm saying what I will be doing. So we've got a plan now for July. Let's take a look at what happens at the end of the month. We can close this out, do another update in a few days' time. Make sure you hit the like and subscribe button. Let me know in the comments section down below what you think is going to happen in this next stage of the cycle. Do you think everything is going to rhyme like it has done in history, or do you think this is still part of a bigger bear market rally and a further collapse of the lows, 19.5 and 15.5? If it is a bear market, it must break $15,500. Thanks again, guys. I'll catch you at the next video. Big one's coming up, the interview with Phil Anderson. Just waiting on that to come through from the editors, and then I'll get that out to you guys. Hope you had a great weekend. I'll see you at the next one. This has been prices that Bitcoin will never hit again. See you at the next one. Till then, take care and peace out.